So what we always say, Bitcoin is a peaceful, fair, and equitable way for us to settle our differences. As everyone embraces it, peace will spread, equity will spread, fairness will spread, truth will spread, toxicity should decay.
Bitcoin Zela stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zela today and enjoy the new edge.
Michael Saylor dives into the future of stocks and bonds backed by Bitcoin, exploring opportunities and risks. Let's watch.
In a world of that's U.S. dollar, the U.S. economy is growing and the dollar is the king of the world. It's the world reserve currency. And there's no, there was no world war after World War II, right? Mm-hmm. So we haven't had a massive disruptive world war. Then you're living in a very particular situation, a particular time, and and you could fall into, in calculus, we call it a particular solution to a differential equation. If all of the boundary conditions are set, and if this, 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 then you can just plug in this number and you'll get out that answer. And that is true as long as you don't change any of the boundary conditions of the assumption. If you've got the solution for aluminum, and then I change the metal to steel, then the formula doesn't work. Mm-hmm. So at that point, you can't use a particular solution. You have to use the homogeneous solution. You have to be not the engineer, but you have to be the physicist. You can't be the trade craftsman with the simple lookup table of the answer. You actually have to derive it from first principles. So what you see is most people have never in their life had to derive anything from first principles. They've used the particular solutions given to them by someone that taught them the answer. And that breaks down when, for example, your entire currency collapses. For example, if you live in a economy where the currency is collapsing, like Lebanon, and they freeze your bank account and the currency goes to zero, or anywhere in Africa, or if you lived in Argentina when the currency collapsed, then if you actually owned anything with cash flows, they're all worthless. So the irony, of course, is one of these good traditional safe assets that generates cash flows, well, not in Nigerian currency, not in the Bolivar, not in the peso, not in the Lebanese currency, not in the Iraqi or the Afghani currency. I can give you not in a Russian currency, before the collapse of the ruble that took place at the turn of the century, 96 or something. So the people that have these ideas, they have a particular set of solutions that work in a very stable, closed ecosystem that's never been challenged either with external stress or never encountered a new idea. When the people that will get Bitcoin will either come out of very chaotic environments, collapsing currency environments where they had to think for themselves, or they'll be at their base kind of scientists, first principles thinkers, people that question everything and rederive it. So I think the great irony is again the CEO of Vanguard saying Bitcoin is not an investable asset because it doesn't have cash flows, and then the largest shareholder of my company being Vanguard.
Ironic.
The most ironic outcome is most likely, according to Mr. Musk.
The truth about lost Bitcoin is both fascinating and shocking. With nearly 19.92 million BTC in circulation and a hard cap of 21 million, Bitcoin is already scarce. Yet, reports suggest that between 2 and 4 million coins are lost forever. That means a large chunk of the supply is essentially gone, tightening scarcity even further and making Bitcoin more valuable in the long run. Experts at Chainalysis estimate that 2.3 to 3.7 million BTC, roughly 11 to 18% of the maximum supply, can never be recovered. Fortune even reports this number could be as high as 4 million coins, valued today at around $466 billion. Stories like James Howells, who accidentally threw away a hard drive holding 7,500 BTC, highlight how devastating a simple mistake can be. Lost doesn't mean destroyed. Those coins still sit on the blockchain, but without private keys or seed phrases, they're locked away forever. Unless revolutionary tech like quantum computing intervenes, they'll remain untouched.
I think the market's in getting educated mode. I mean, I just had 25 investors and I asked them, how familiar are you with this? And they're like, no. Tell us about Bitcoin, and is Bitcoin going to get banned, or not? And we literally have to go back to, Bitcoin was actually not going to get banned in 2023.
Right.
And then you have to lay out the crypto industry in general. And then you explain the various credit instruments. Then you explain the equity. And so most of the market's still getting educated. If you wanted a metaphor, imagine that the year was 1870 and people are starting to refine crude oil. And there's a bunch of companies being launched, to do crude oil things. And then someone comes up with an idea for plexiglass or Lexan, and there's polyester and there's Lycra and there's nylon. And there's all these possible petrochemical
applications,
products, and there's and someone's talking about kerosene, and some guy saying, well, I think we could use diesel or gasoline, and some guy talks about asphalt, and and all the investors are sitting around saying, is this a good idea? How big could this industry be? And they're still struggling with how big could the kerosene business be in 180 countries. And by the way, the first application of kerosene was lamps to light your home. It was light, and then it became engines, and then it became heaters, and then it became jet fuel, and it's rocket fuel today.
Mm-hmm.
And so I think the industry is just so embryonic that, the companies are learning how to explain what they're doing. They're deciding what they're going to do. The companies are deciding what their business model will be. The investors are trying to understand the business models and the industry. The regulators, are evolving the regulations, and this is all happening in real time. So this is the digital gold rush, and the 10 years from 2025 to 2035. There's going to be a lot of different business models, a lot of different products created, and a lot of different companies launched, and a lot of money made, and there'll be a lot of mistakes made, and a lot of fortunes created, and this is what the chaos of the marketplace.
The momentum for Bitcoin regulation in the United States is picking up speed as the 2026 midterms approach, with the Clarity Act at the center of the debate. Backed by Democratic senators, the act aims to bring more structure and transparency to the crypto market. Senator Ruben Gallego and his colleagues have called for true bipartisan cooperation, urging Republicans to join in shaping legislation that could redefine how digital assets are governed in America. At the same time, Dennis Porter, CEO of the Satoshi Action Fund, has hinted at a massive Bitcoin announcement that could shift the perception of crypto adoption nationwide. His lobbying push in Washington, D.C. has caught the attention of both traders and policymakers, fueling speculation about what's next for Bitcoin in U.S. law. The stakes are high. Over 50 million Americans are now active in crypto, while over 20 states have already moved forward with pro-Bitcoin policies. With growing concerns over national debt and economists like Ray Dalio pointing to Bitcoin as a hedge, clear regulation could set the stage for a new crypto wave. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zela for daily news all for free. That's all for today's video. Until next time.